Another quick update as the markets continue to run very volatile. A dip below the 39 level today, as we are currently seeing lows at $38.60 per ounce. It's still over 38.11, and I'm going to be going with the same information of as long as it's above 38.11, I am not bearish. And I use those words specifically for the intermediate term of not saying bullish because I needed that 5-day moving average to confirm that it's going to fail or pass. It hasn't even failed yet. More on that on the blog later on. As far as some significant Fibonacci points, we know the high is 42 and a quarter, and this previous low is 33. So we can do some Fibonacci mathematics and come up with a some nice little significant points. This 42.22 level calculates this high, the 49.81, which is right in here, as well as the 32, and it's 30. I got 32.32. Again, if you only use pennies, your outcome difference is only going to be pennies. And the top is 42.25. Therefore, this was a Fibonacci hit. If we take the high of 42.25 and divide it by, we'll do 33, put this to the power of 61.8%. That's the level it needs to hold to maintain the current bullishness run within that time period. And that is at 1.16. We'll multiply that by 33, which gives us a price objective down to 38.44. We will probably end up seeing that level either, most likely today. It's an area where you expect to find the levels of support. But when markets get very chaotic, they oftentimes create extra volatility, bigger candles. And yes, the 39 level wasn't a hit with this move, but the 33 level was. So they both can, you don't know exactly what the Fibonacci mark's supposed to be. Yes, we could be hitting that 38, but it might even hit the 61.8% level. Now, as far as the volatility is concerned, I stated at the end of last week, either on a video or on the blog, that it looked like it was going to make a test up towards this area. It has, and that it would make a test of this 5% area. Again, it has done so. I was actually thinking about coming out and stating, well, yesterday I was feeling that likeliness of $100 this year might be dipping below 50%, and it's impossible to even come up with a good ballpark percent for what that would be. But for me to see the 100, I need to see this go high. So therefore, I'm still going to make it barely probable that into early next year, and that's what I stated originally, that in the springish or so of 2012, we should have seen $100 at one time, because this is what's needed. But we need to see the market play out. It's very difficult to state on what time frame this is going to be affected and how it's going to be affected. There is guaranteed to see a very big, fast move, or failed move, which should bring a fast move, because having this breakout here is the same as this. And the 50-day moving average has the exact same pattern right now. And that is, you have a move below, and if you don't refuse the market, or you don't change the momentum of the market, and this would be have to go down, which it didn't do here, here, or here, then that's a failure. Okay, so it's now above it. So now if we don't change the momentum of the market by finding support here and going higher, or at some point and going higher, then this would be a failed move, which would mean at least a test down towards the bottom range at 33. So the failed move is guaranteed. Whether the fast move happens in its opposite direction yet is not, because if it doesn't do that, then that usually just means sideways consolidation. All right, thank you for tuning in, and take care.